Have you got your AirDrop on? Because I just want to send you this document.
Yeah.
From Santander.
I think it should be.
Yeah, there you go. Oh, I don't know whether that's your phone.
Yeah, here we go. Got it. So what is this here?
Yeah. So what I want to show you is there's a big conversation at the minute going on about discretionary commission models, right? And for pretty much all of 2024, it was all about the FCA banning discretionary interest models or discretionary commission models. And what that basically means, for anyone who doesn't know, is that you earn more commission by playing with the interest rate on a car finance agreement. That's how apparently they earn a lot more money. And for a long time, and for all of 2024, and even now, Martin Lewis and other so-called experts are discounting fixed commissions. And I've always said that the fixed commissions, when we've looked at the documents, and this is one of the documents I want to show you to like blow your mind a bit, is fixed commissions shouldn't be ignored, because people seem to think fixed commissions are like £50, £100 paid to the car financer, paid to the car dealer. And that is not the case.
Yeah, I think that's the main problem people are struggling with. I've seen a few of the TikTok posts, and people in the comments are saying stuff like, yeah, but these people need to earn a living and these types of things, as if they're not aware of how much money they've been paid out.
Oh, 100%. And this goes down to one of the reasons that we're doing all of this content in the podcast is people just don't know. They don't know what they're talking about, but it's just because they've not been exposed to it before. And I don't mean it in a degrading way, but...
No, of course, you wouldn't come across it in your natural day-to-day. We're trying to make legal go viral, right?
Yeah, exactly. But to say a fixed commission, I think everyone's right in assuming that you would assume like someone got paid. It doesn't matter what you sell, you get paid £100 or you get paid £200 or whatever that fixed fee is. But I just want to, if you can open that document now and just scroll down.
To page what?
Well, when the page numbers start coming up, you want to go down to page, where is it? You want to go down to page, I think it's like 15 or something.
Oh, wow. Okay. Here I am, yeah.
Just find it now.
Particulars of breach of Consumer Credit Act 1974? No.
Not that bit. I'll find it. Should have had this up before. But basically what you're looking at now is like the whole, for this past case, this is like everything that was ever disclosed to us by the bank.
This is so interesting.
Yeah. And this is cool, right? So it's page 32. 32.
Here we go. Mr. Boop. Boop.
Yeah, don't read that out.
Oh, okay, we're gonna beep
we'll
that
beep
out.
that out.
Boop.
Yeah. So it was against Santander. This was for a case earlier on last year that has closed. But what I want you to have a look at is just read number 1 and 2.
Okay. Details of the commission paid in respect of the finance agreement that is the subject of the claim. A scale commission of 9,781 with 9 pence, a head office commission of 4,279 and 23 pence, and an outcome bonus of 1,988 with 82 pence.
Okay, so that alone is a lot of commissions knocking around. This is one agreement, by the way.
That's not £100 up.
No, so there was a scale commission of £9,781 and 9 pence, a head office commission of £4,279 and 23 pence, and an outcome bonus, whatever that is, for £1,988 and 82 pence. Okay?
Mm-hmm.
Section number 2. Details of how the commission was calculated. And this is where Martin Lewis needs to take note, and the FCA needs to take note, actually. And this is when we wrote to Martin Lewis and the FCA, like back in February of 2024, we included a document very similar to this, and it basically says the same as what we're going to read out here, but this is worse. The scale commission was 12% of the amount of credit. And scale commission, that's another word for DCA because it was scalable. The head office commission, and this is the interesting bit, The head office commission was paid as a fixed percentage of the amount financed. In this case, it was 5.25%. The outcome bonus was paid as a fixed percentage of the amount financed. In this case, 2.44%. So the key word being fixed. So when all these experts are sat there, and the FCA have only just come out and said that they're going to include fixed commissions, by the way, because I think everyone, including Martin Lewis, was sat there going, fixed commissions, yeah, it's only going to be 200 quid. It's only going to be 300 quid, whatever that is. No, it was a fixed percentage, in this case, 5.25% and 2.44%.
Wow.
So a total of literally almost 8% of the total amount financed being paid as a fixed commission. And how much was the amount financed, you asked? Let's scroll back to the top. Total amount financed, have a guess. For a Land Rover.
Don't know, you tell me.
Amount
with these numbers is
amount of credit, £81,509.
oh. And the owner's probably driving this car not knowing about this at all.
So nearly 10% of this agreement, of the actual amount financed, the 81,000, nearly 10%, so I think 8% of 81 grand was paid as a commission. And then there was another amount, let me just scroll back down to pull it back up again so I get the number absolutely right. Page 32. And then 12% was paid as the amount of credit. So there's 12% plus 744, 725. So nearly 20%. I'm laughing because I can't believe it. Nearly 20% of the amount of credit of an £81,000 loan for a Land Rover was paid as a commission. And this is the problem I've got, is that everyone sat there going, yeah, discretionary commission models are bad. Well, how is it ever justified to pay almost 50% of your total commission structure as a fixed commission?
Mm-hmm.
How is that any different? Yeah, okay, you had the discretion to make this car finance agreement cheaper or more expensive because you had that discretion over the interest rate. But there's another 8% here paid fixed against the loan amount. So it was always going to be within the salesperson's interest or within the car dealership's interest to get that person to finance the car, finance as much as possible. So let's roll in some negative equity. Let's roll in your old car. Let's take that in as payment, and any negative equity, let's stick that on. But also, how can we increase the value of this car so you finance more? I know. Let's lump in paint protection. Let's lump in services. Oh, you want to get TVs in the back of the car?
Cool,
oh,
we can do that.
We can do that, yeah. Let me put in a polish. Let me put in gap insurance.
Champagne.
All sorts. Oh, you want some rubber mats, do you? Yeah, okay, that's going to go in the finance. You could probably quite easy, especially with Land Rover, you could easily lump in 10, 15, 20 grand's worth of extras, of which they are going to finance as a deal to you, because they bump it up because they know they get a fixed amount as the total credit amount. It's absolutely a joke.
You just need to figure out like a fancy name to add to it. Outcome bonus. What does that mean? Outcome bonus.
Outcome bonus. I've never seen outcome bonus. I've seen volume bonus. I've seen marketing support budget.
1,988.
It's absolutely crazy. I mean, I'm going to go back to the letter we actually sent to the FCA with all of this documents on, because this is crazy. This one is absolutely crazy. Let me just pull it up. So back in, when was it? March. Yeah, March. In March 2024, we sent, I actually bombarded the FCA with a load of stuff and no one responded to me. So I went on the FCA website and I found every single person ever I could find and basically sent them an email. And it came back and someone finally picked up the phone. And off the back of like a 2-hour call of showing them everything, screen sharing, all of the stuff that we've got, I put together a document that basically says in chronological order, this is how we get treated as a law firm representing a client. This is what they deny. This is when they like try to say that we've got no basis of a claim, we've not got any information, we've not got any evidence here, and stuff like that. And then I wanted to show to the FCA that they're just so uncooperative, and they put all of these stupid redactions on, and they don't answer your questions, and then they ignore you, and they don't come back to you. So then I gave them a document that I'm looking at now. I'm just going to airdrop it to you so you can see what I'm looking at, because some of the screens are just ridiculous. And this is against Black Horse. And this, again, was for a case that, believe it or not, we lost this case. With all of this evidence, like, honestly, with all of this evidence that we had of, like, a percentage of advance, a volume bonus, and advance commission, we lost it.
What page am I going to?
So you want to go to... Let's have a look. So you want to go, it's towards the bottom, like really to the bottom. Like
17, 18 maybe? Here, commission
page
rate
12.
lines, yeah.
Page 12.
Oh, sorry. Yeah.
So this is part of the Black Horse Retail Rates and Terms Agreement.
Mm-hmm.
And if you go to page 12, you'll see there's a section that says commission.
Yeah.
And then just below commission, it says second commission.
What?
Exactly.
Sorry, what?
Exactly. So on commission, it says, we will pay an introductory commission for all business written within these rates and terms detailed in the customer rates and product terms section above on the following basis. Commission is 9.7% of the sum advanced. So that, for in layman's terms, is the total amount that you finance, the loan, the total sum, that's what you're getting paid off. So 9.7% is paid as the commission. Second commission, it is possible to divert a portion of your commission to a transaction account other than that of the supplying dealer. At your request, we are paying commission on the following basis. Supplier dealer commission, 6% of the sum advanced. Second commission, 3.7% of the sum advanced paid to a transaction account. What does that mean? So
that's gibberish.
Yeah, gibberish. But straight away, there's multiple remuneration methods. But then it goes into how the payment protection insurance would be paid, which was a massive scandal in itself. But scroll down onto page 15.
Mm-hmm.
What does the top line say?
Advanced support budget?
Advanced support budget. And you've seen
I like the names. They're creative with the names.
Really
They're
creative.
really creative.
Because this goes back to the issue that we had, like, right back in 2022, 2023. We obviously wrote to all of the lenders on behalf of the clients and said, right, give us all of the commission information. And they came back, so there's no commission paid, or there's only £100 paid, or it was 0% or whatever. So we was like, there's no way that you've not paid a commission. So what was it? And they go, oh yeah, sorry, we paid a commission to the guy who sold the car. It was like 150 quid. Nope, not having that. And then you realise that it's not until you get hold of one of these documents and you go, all right, send me, well, how did they word it? Send me second commission as per the retail rates and terms agreement that I'm looking at. Or, like we're looking at now, advanced support budget. Subject to formal credit approval, we will pay the sum of £44,000 as an advanced payment for a support budget. And I just love how poor the scan is, you know, in
yeah, no, you can barely read it.
Barely read it. I don't know how you manage to achieve that by a scanner, especially considering just that section there is the only bit that's damaged. But it goes on even further to say the initial sum is based on an expectation of at least £2.8 million of retail advances. So that's straight away going, we're going to give you this advance commission, this advance support budget, as long as you do this much deal. As long as you lend this much money on our behalf. Yeah. So straight away there's a conflict of interest. Straight away, how can someone receive money that's tied to a financial KPI, a key performance indicator? How can... If there's a dealership who's got a load of money in and they know they've got to do £2.8 million worth of finance with this particular lender, how can they ever be impartial?
Yeah, no, of course. That sends them straight to the races. They go, okay, boom, let's try this out as much as we can, include as much as we can.
Include as much as you can, but it's almost like, well, okay, if I've received this money, this £44,000, if I don't achieve £2.8 million of retail advances, as they refer to it, I'm going to, as it says below, you'll start to have to pay back and be liable to repay to us the remaining 20% of the initial sum if you've not achieved the minimum support budget. Okay, so I've now got to pay back money that you've given me because I've not lent enough money. So therefore, I'm always going to prioritize this lender, regardless of what my terms and conditions say, regardless of if I've got another lender that will do it cheaper, do a better rate for the consumer, whatever it is. There's a clear conflict of interest there where they need to now prioritize putting a load of work, a load of finance, a load of loans into this particular lender for the purpose of clients coming in looking for car finance, because otherwise I'm going to have to repay a load of money at the end of the agreement.
Honestly, this is crazy.
So it just goes back to what the Court of Appeal was saying, that it was selfish, dishonest, acting in their own self-interest. But the lenders were always putting the car dealers in a position where they couldn't have a disinterested duty, as they called it in the Court of Appeal, and they couldn't uphold a fiduciary duty because they had a bias, or they was put into a position by the lenders to prioritize giving them work over others that might have been better suited to the client. But if you go down a bit further, what's the next bit that's underlined? What does that say?
To what page? Are we still on page?
We're still on page 15.
15. Yeah, the advance commission again? Or?
Yeah, well, we've just done...
Honestly,
we've just done...
How many commissions are you going to include in this?
Exactly. You've just read advance support budget. That's what we've just covered off.
The next advance commission, and then the next one's going to be advance mega commission.
Advance commission. But this one, advance commission, bearing in mind, this is one finance agreement. This is what we're talking about. One finance agreement. Advance commission. Subject to formal credit approval, we will pay the sum of... Can you see how much that says?
It's barely reading.
It's
150?
150,000. 150,000. Subject to formal credit approval, we will pay the sum of 150,000 in brackets, the advance commission sum, close brackets, as an advance payment towards, this is the best bit, future commission earnings. So let's rewind.
Yeah, let's cut through the noise.
Okay. So 1 second. I've not even had a single customer come through the door.
Yep.
But I've earned or been paid an advance commission of £150,000 based on future commission earnings.
Perfect. Money in my pocket.
So I don't even... So this is... I laughing about it is wrong, but honestly, I cannot believe it's in there. Someone has been paid in advance for work that they've not yet done for a customer that does not yet exist, based on what? Yeah. Based on
how is this a scam? How?
But yeah, based on how can you get... I'm lost for words.
Yeah. How can you tell me, how did you lose this case? Like, what actually went down?
This was
what happened?
Really early on. It was where the judge basically said that he said the British public shouldn't be so trusting. Was the judge's words. Honestly, couldn't believe it. This was way back in the early days of car finance claims.
Do you think if you were to bring this up again, you would
wipe the floor? Wipe the floor with it.
Could that happen technically, or?
Well, after you've had a judge, after you've won or lost a case, there's 21 days to appeal it.
Yeah. Okay.
So I mean, anyone
Just
listening who's got an idea of like retrying this case, I mean, shout me, like Sam at sentinellegal.co.uk, because that would be very, very interesting to see, because this is ridiculous.
Yeah.
And
he deserves that money back.
It was a long time. It was over 2 years ago, but it gets worse. Believe it or not, it gets worse. £150,000 is an advance commission. So they've had £150,000 advance, right? Mm-hmm. So therefore, they know that if they don't hit their KPIs, bearing in mind they've already had £44,000 paid as a support budget, they've now got £150,000 paid in advance support as an advance commission based on future commission earnings. They definitely have to, if you remember earlier on in the document, they have to do £2.8 million worth of business with this lender. So tell me about, going back to the Court of Appeal, this is exactly what they're saying. They were so incentivized to prioritize a certain lender over another, regardless of if it was in the best interest of the clients or not. They were always going to go with this lender because the lender gave them so much money in advance. Plus, they were getting, 9% of the total amount financed as well. So anyway, it gets worse. The facility will be subject to you accepting the terms and conditions, which will be contained in a separate document, setting out the terms, blah, blah, blah. The sum will be topped up 2 times on an annual basis.
Come on.
The sum will be topped up 2 times on an annual basis. So that means this one finance agreement here is part of a big pot of a dealer receiving £300,000 in advance commissions, a £44,000 support budget, whatever that means, before any client has even walked through the door.
What is your take? Like, how did this go on? Because this, now that we're reading it, this cannot go unnoticed. How did it go unnoticed for so long, do you think?
We going back to what we said in the previous podcast, we did a load of interviews with like whistleblowers and guys who were working in the industry at the time. And they basically said that the contracts said, we may pay a commission. That's it. That's all it said. But that was the customer facing contract. The actual contract to the head office or the dealership or the company that owns the dealerships would contain all of this information. And this, for everyone listening, this is called the retail rates and terms agreements. And this is the contract between the car finance lender and the dealership. So they have a broker, like an intermediary agreement, a broker agreement. So this would never, ever be seen by the customer. And the customer would have to ask, how much commission are you getting?
Oh, yeah. So there's no authority persecuting these things. You guys had to be the guys to show this, right? To shine the light on this.
But also, you've got to then break down the terminology used, like the wording used by people. Like when they say, like we had with the commissions. If you called it a commission, you did not get told what the commission was. You got told what the commission was paid to the car salesperson, the person on the floor, the person who sold the car, which could have been anywhere between sort of 50 quid to, I think the highest we've seen is like 450 quid. So if you were a customer buying a car and you did have the foresight all the way back then to say, this doesn't feel very right, what commission are you earning, Mr. Salesperson? They would have probably gone, 200 quid, 250 quid. And I think no one is ever going to sit there and go, I don't want you to earn 200 quid when I'm buying an £80,000 car or whatever.
It's nothing.
It's nothing. Yeah, in the grand scheme of things, you go, that seems reasonable for the work that you're doing. 200 quid.
Yeah, if they've done a good job of presenting the car, etc.
And to be fair, I don't know. Yeah, I've been and bought a car before on finance, and to be fair, they make you feel like royalty. It's quite a nice experience. Unlimited coffees, few biscuits. But it's crazy. That's all. And so we've seen the advanced support budget. We've seen commission. We've seen commission 2. We've seen advanced support budget. And we've seen advance commission, and the advance commission being £150,000, topped up twice on an annual basis, right?
Yeah.
So let's continue to scroll.
Okay. Page 16.
Yeah. So this is obviously, you can see all of the back end screens. Yeah. You like these old looking, I don't know, it looks like something off a computer screen from the 90s with all of the green text and the black background.
Quite hacker.
Yeah, it does look a bit hacker, but obviously you can see, dealer demographics, dealer and plan inquiry, standard dealer plan, proposal decision history. Within that proposal decision history, it actually shows you the commission, like commission 1, commission 2. Yeah,
of course, the viewers cannot see this, right?
No, they can't see this,
unfortunately.
Unfortunately, but
I'm having a lot of fun revising these.
But there's a cool screen called commission rate lines. And if you zoom into commission rate lines, what you'll see there is 2 figures, 3%. And 13%.
Again.
So minimum rate 3%, max rate 13.9%. So that means that they could have gone. This is the commission rate line screen, remember? So this is the minimum rate 3%, maximum rate 13.9%.
Yeah, I can see it.
That's the interest levels. So they could go as high as 13.9%, which is referred to as the campaign rate, which is what they want you to sell the car at to get the maximum commissions. But the minimum rate, by the looks of what I'm looking at right now, they could go all the way down to 3% interest. But obviously, they would get less commission.
Yeah, of course. They would not do that.
And it says minimum term 12, maximum term 60 months, minimum advance £1,000, maximum advance £300,000. Cool. Okay. But we know you can go between 3 and 13.9%. Okay. Scrolling a bit further down. So we've got this screen here where it comes to core commission model.
Yeah.
Nothing in there. Flat fee. Nope, it wasn't a flat fee. Percentage of advance. That seems to be quite interesting. So bearing in mind below it goes flat fee, percentage of advance, difference in charges. Now, believe it or not, the difference in charges section is what all of the fuss is about, or what all of the fuss has been about, because they would take the difference between what the lender was selling the car at in terms of interest rate and what they could get away with charging the customer at the interest rate. And that difference, they could go as low as 4% and they were getting it out at 8%. They took the 4% margin. That's the difference in charges. You'll notice on this one, there's nothing in there. But on the percentage of advance, it's fully filled out. So this entire agreement, which was done ages ago, was literally paid under a fixed commission model. So when the FCA haven't banned fixed commission models, they've only just brought it in. They brought it in the latter part of 2024. The fixed commission models are so much more prolific with the likes of Santander and Black Horse because they were charged at a fixed percentage of the total amount financed. And that's where people like Martin Lewis don't know what they're talking about, because they've not seen all of these agreements. They've not seen the hundreds of these agreements that we've seen that break it down quite clearly. Here it goes. Net commission. Standard customer rate, let's start. Standard customer rate was 13.9%, as we saw on the previous screen.
Yeah.
Total commission, £1,891.50. This is on a completely different car now, by the way. It's not the Santander Land Rover one. This is £1,891.50. Commission 1 being made up of 6%, which is £1,170. Commission 2 being 3.7% of the total amount financed, £721.50. Okay.
Gosh.
Okay, so you're there. You're nearly at 9% of the total amount financed. But scroll down a bit further. Other dealer remuneration.
Here we go again.
Sorry.
How many more names can they come up with?
So let me just stop there, right? This is what I keep saying. Moody's have come out and valued it at 30 billion, the industry at 30 billion in terms of what this could cost the banks, right?
Wow.
Originally, it was just Close Brothers getting smashed. Then Santander had put money aside. Then Lloyd's had put more aside, which was for Black Horse. But all of these analysts, all of these investment bank analysts that are saying, oh, this is what we think it's valued at, 20 billion, 21 billion, 28 billion, now 30 billion, they are miles off. Because what they're taking into account is the discretionary commission models that were banned. Now, Santander being one of the biggest players in the space, Black Horse being one of the biggest players in the space, they didn't just use discretionary interest models. They used fixed commission models pinned as a fixed percentage against the overall amount of credit. So the bigger the loan you took for your car finance, they got a bigger chunk of commission. So in this case, we're looking at now other dealer remuneration, marketing support or training budget, £44,000. Expected loans, 2.8 million. So they had to do 2.8 million. An advance of £19,500 for this agreement, which equated to, and this is the other issue I take, when we've gone back to all of these lenders and said, oh, what's the volume bonus? What's the support budget? You know, what other remunerations? They go, oh, yeah, we can't calculate this. We can't do it.
It's too complicated.
It's too complicated to calculate how that's... This is what they say in court. We can't calculate how a volume bonus would have impacted this deal or how a support budget would have impacted this deal. Well, you're lying.
Yeah, you're lying. You're hiding information.
You're lying because I've got it in front of me. Support budget for this agreement. So this is the calculation, which however they've done the calculation based on them doing £2.8 million worth of business and an advance budget here of £19,500, a budget amount of £44,000 for an advance support budget, an advance commission, of £19,500. Support budget for this agreement equates to £306.15. So on top of your £1,891.50, you've got an additional £306. So let's do the quick maths.
Yep. Let's pull out the calculator.
£306. Let's get the numbers right. 15 pence plus, what did I say? £1,891.50 equals, so £2,197.65. Let's scroll to the top and see what that comes out as. So what was this car for? Let me find it. Okay. Oh, brilliant.
Oh, no.
No.
You're joking.
Wow. No. The total amount, so the total commission paid on this was £2,197.65. Right?
Mm-hmm. Come on, say it.
The total amount of credit was £4,595.05.
Oh man, that is brutal.
This is with Black Horse. That is shocking.
That is brutal.
£4,595.05. Let me just do that so they get the exact amount. 95.05. Take away the £197.65, left £2,397. So nearly 50% of the total amount of credit was paid as a commission.
There you go, Martin Lewis.
So here goes. The total amount you will have to pay, £8,648.25. Let's just do that as a percentage. I want to get the exact percentage. 459505. So, what is 2397.40 as a percentage of £4,595.05? I love ChatGPT.
Yeah. Although it has its days, some days it's not really good. I had one of those days today.
The value of £2,397. Sorry, stupid. That's me.
Yeah, there we go.
What is 2,000? It's actually 2,100, not 2,300. My mistake. What is 2,197.65 pence? £2,197.65 as a percentage of £4,595.05. Analysing. The value, £2,197.65, is approximately 47.83% of the total amount financed. So 47.83% of the total loan amount was paid as a commission. So this is what blows your mind. Let's ask it. Do you think this is a fair commission to be paid on a car finance agreement? Depends on several factors, including transparency, market standards, consumer benefit, regulatory perspective, ethical considerations. Conclusion. While it's not inherently wrong to pay a commission, one approaching 50% of the cost of credit may be excessive unless accompanied by a clear disclosure and significant consumer benefits. From a consumer protection standpoint, such a high rate would likely face criticism and could be challenged as part of a mis-selling claim. Boom.
Oh wow.
That's
Okay.
That's what
Yeah.
ChatGPT just said.
Which is ChatGPT is the nicest guy you'll ever meet.
Yeah. Thank you, ChatGPT. You're welcome. It's just mental. That's one agreement. That's a Black Horse agreement, and I don't know what the car is. I can't see.
And we're seeing these case after case after case. It's not one. It's not two.
It's not one. It's not two. It's literally
on a weekly basis.
They all follow the same suit, regardless of the amount of finance taken out by the client, by whatever car it is, whether it's a low value one, which is like this, or whether it's high value one, consumers are getting ripped off. And unless you've done the analysis, I mean, obviously here it says cost of the credit, 25% APR, 20.3% rate of interest. Consumers are getting ripped off, and unless you've sat there and done the analysis and gone through all of the agreements and done the calculations like we've just done, then it's.
Yeah, I'm just checking.
I think it's stopped.
Yeah, it's stopped. For fuck's sake.
What is it? Battery?
Yeah. Okay, we're gonna have switch batteries quick. Okay, we are back.
Okay.
Yeah, we had a quick break.
Change the battery.
Yeah, so this is not one case, it's not two cases. We're seeing this every single day, every single week, every single month.
Exactly, that's the issue. This is, unless you've done the analysis, no one has ever seen this level of detail. Unless you're physically issued on hundreds and hundreds of car finance agreements, you are never going to understand it. And that's why I think it's so easy for people like Martin Lewis and other journalists and even the FCA to dismiss car finance claims and the whole fixed commission element. But they've never looked at the agreements. Not because they've not been shown them. I mean, I must have sent 20 emails last year to the FCA with information to money saving expert Martin Lewis, his team. They've got a full, have you got a story, send it us at this email address, sent them everything, all of the documents, password protected stuff, the lot. I mean, it was all old cases, obviously, but it still gave them everything that we just discussed on this podcast. And you just look at it and go, well, how is there not national outcry? How is the regulator not kicking off and going, wow, this is bad? But going back to what I said earlier was that all of the analysts that are valuing this at 30 billion, they don't know the half of it. They've not seen these documents. They're valuing it off this discretionary interest model, which was banned at the time, and it was all talked about. Part of my cynical side now thinks that was a tactic. They wanted to only talk about this discretionary model because it hid a lot away from the true facts.
Yeah, of course. I think it's very easy to make the connections once now this is unfolded, right?
Yeah, I think they genuinely wanted to go, okay, yeah, it was just discretionary interest, which wasn't a major part of the commission. But when you break it down, you go, wow, actually, these the fixed commission is actually bigger. So I think it would be reasonable to say, whatever the market valuation is based off discretionary interest, which is 30 billion at the moment according to Moody's, double it. Why is the market not worth 60 billion? Because we know some of the biggest perpetrators of this is Black Horse and Santander, who collectively control a huge market share. Whatever their allocation to the car finance industry is, double it.
Yeah.
Because you just omitted like literally 50% of the way this commission structure is built, and we're looking at it black and white here. So yeah. That's what I wanted to show you anyway.
Yeah, no, that is very interesting, and I think it's very cool to see for other people. Obviously, they don't have access to the documents, but just going over the exact details, not just talking about something you've heard online or something like that, but having all the documents here laid out. I think it's very helpful for anyone out there that obviously wants to file a complaint. So what would you say to anyone listening to this that want to file a complaint?
I'll just say that, being completely biased, if you want to go with someone who knows what they're talking about, you can go on the website, www.sentinellegal.co.uk. You can file a complaint. We know what we're doing.
Yeah.
We're doing it every single day, and we have been doing it for the last 4 years. You can do it yourself. You can literally go on your lender's website if you've got the finance agreement in front of you. just go to the bottom. It usually has a complaints at whatever their email address is. You can go on their website, find the complaints form, send them an email, just title it, car finance claim or car finance complaint. They'll send you an email. They should acknowledge it. They should tell you that all of the complaints have been paused at the minute, that obviously are outside of the courts, that aren't being issued on, which is what we're doing. And you can do it that way, and you can see what happens. It's probably going to be early 2026, before we see any form of compensation scheme go live, pending obviously what happens in the Court of Appeal on the 1st of April. That's a 3-day hearing, April 1st, 2nd and 3rd in the Supreme Court in London. And then we think that off the back of whatever happens in the Supreme Court, that will then give the FCA all of the information that they need to go, okay, this is what we're going to do about it. This is how you're going to get compensation. This is how you have to complain. This is how long the lenders have to respond. This is how long the lenders have to pay out. This is what you can expect. This is how you can value everything you could ever need to make a car finance claim in 2025. You will probably get given it at some point in the latter part of 2025, I think, pending what happens with the Supreme Court, obviously. So I think it's going to be a really fast run to the year. But I will urge anyone listening who's got contacts at Martin Lewis, money saving expert, the FCA, this documentation is there for anyone to see who is obviously from a regulatory body or a professional outfit.
And wants to do the research.
Correct. But we've got hundreds of these documents, and I'm fed up of people downplaying what's actually happened to people here, because it's about time someone stood up who knows what they're talking about, who's got the evidence to back it up, who can articulate it in a way that, is influential enough to go, no, you're not looking in the right places. And if you don't want to look, that tells us everything we need to know.
Exactly. Plus, people have been watching the content, so why not Sentinel Legal?
Yeah, why not? Why not? Why not us?
Perfect. Thank you very much.
No worries.
Thank you.